We're here with Aamir Jamil from Mortgage Alliance Active in Mississauga, and Aamir is the broker of record for Mortgage Alliance, and he manages about, how many agents do you have now?
We have about 22 plus.
22 agents that are working with him. So we're going to be chatting with him in regards to mortgages and the questions that most buyers should be asking today, and what different terms in the mortgage business mean. So Aamir, why don't you tell us a little bit about yourself, how long you've been in the business, and
Yeah, we basically our team is in the mortgage industry more than 12 years. So we are dealing right now with Mortgage Alliance. It's one of the biggest franchise in the mortgage industry. So we provide all kind of solution to the people.
all right, so let's just cut to the chase. So, what is the criteria today? What is the minimum criteria? If somebody's looking to buy a house, what is the minimum criteria for them?
It depends. Any mortgage, it comes basically. There are three pillars for that. Basically, your credit score and your income, and also the purchase price of the property.
Mm-hmm.
So there are different products. Even we have product even which you can be 0% to as low as. But again, it depends. We have to work on case to case basis.
So the option of 0% is still available.
It is still available, but there is not much lenders who are doing this.
Mm-hmm.
But I have a couple of lenders who are still dealing with those people. Like before, it used to work like you have to come up with a 5% down payment, then they give you back money. But in this scenario, you can use the same money as a down payment, and still it will be a 0%.
Okay. What other minimum requirements are there in terms of credit score? You said was another pillar.
Credit score, like you can judge based only on the credit score. Credit score is one of the factors.
Mm-hmm.
So basically, what bank does is they just want to secure their money. They want to see the client want to. Credit score is only used for the repayment of the mortgage,
Okay.
basically. So they just see the client history, how his habits are in terms of paying the loans and terms. Yeah. So it depends. You can say okay, 680, 650. But normally people, like if you're looking bank looking 680 plus.
Okay.
Yeah, yeah.
What about the third pillar?
Third pillar is your income employment. That plays a big role. Obviously, that works against your TDS, TDS. So how much you can afford.
So before you go further, can you explain what TDS and GDS means?
Yeah, TDS is called basically total debt ratio, and GDS is called gross debt ratio. These are the abbreviation for those. So basically, but money you making it, you can use 30 to 32% towards your interest, taxes, and the utility bills. That is called TDS. And TDS is basically is same thing, but you include in that in your debts too.
Okay.
So based on that, so GDS could be 30 to 32%, and TDS is between 40%, something like that.
Okay, so just to put it in some numbers, let's say somebody's making $1,000 a month. According to the GDS calculation, they are allowed to spend up to $320 in rent.
Yeah, that's right.
Including utilities.
Including utilities and taxes.
And taxes.
Yeah.
Whereas if they have additional debt and they want to do a TDS calculation, so it's up to $400 a month.
Exactly,
okay.
You got it right.
So for every let's say $80, I'm just throwing a number out there right now. So for every $80 of debt that you have to have $1,000 corresponding income with it.
Exactly.
Okay. So is there different criteria first-time home buyers versus repeat home buyers?
When you say different criteria, is it in terms of the down payment?
Well, in terms of purchase versus down payment.
No, there are cases where in both cases you can have the minimum down payment, as I earlier said, which could be between 0 to 5%. But only things you don't get certain benefit as a second-time home buyer or as a repeat home buyers.
Okay.
Yeah.
Okay.
Yeah.
A word that is thrown around a lot when it comes to mortgages is CMHC. Would you care to explain to our viewers what CMHC is?
Yeah, CMSC is basically is a semi-government institution. It's called Canadian Mortgage Housing Corporation. So because of CMSC, we can get the buy a house in today's market as low as 0 to 5%. If CMSC is not available, nobody will be able to buy a house less than, because bank requirement is minimum 20% down payment. So what CMHC basically does, it ensures the mortgage, giving the assurance to the lender that your money is secure. You can go ahead and lend the money to the home buyer as low as 0 to 5%.
Okay.
Yeah.
All right. So just to recap that, it's basically an insurance policy for the lenders.
Yeah, it's basically if you're paying less than 20%, is under the act you have to get the CMSC insurance.
All right. So what are the recent? Now CMHC has implemented some changes just in the recent past. What are some of the changes and how would they affect, let's say, a first-time buyer versus a repeat buyer or investor buyer?
Yeah, I would say the steps they are taking is very good for the nourishing and healthy market, because we don't want to be in the situation as it happened in USA, right?
Yes.
So what they're trying to control that situation, because prices were going too high and everybody was competing and it was going like beyond the limits, right? So they try to control these things. So based on that, they had made certain changes. Like if I tell you, as a qualification process is a little bit changed. Like before, we used to get 3-year interest rate to qualify, even though you buying a variable product.
Okay.
Right now, they change it into minimum, like they need 5-year interest rate to qualify a client on the posted bank rate.
Okay, so what we're talking about is your qualification criteria. So before it was 3 years posted rate,
yeah,
by the banks of
yeah,
a fixed mortgage.
That's right.
Now they're going towards 5 years posted rate. So let's say the posted rate before, well, let's take a step back. So if variable rate right now, for example, you can get it as low as 1.75, which is prime minus 0.5, I'm right?
It will be 1.75%.
Yeah, so 1.75, if a person who would be able to qualify on 1.75% does not necessarily mean they can buy a house, because they might not be able to qualify at the 5-year posted rate.
Yeah, which is like you have to qualify right now. If we look at it, it's 6.25%.
Okay.
So even though you're getting a variable rate mortgage, which is 1.75%, but bank wants, or CMSC wants to qualify at 6.25%. Reason for that is because variable rate is basically changing day by day. If it goes up, your rate go up. If it goes down, your rates go down. So CMSC want to secure themselves and lender and the industry. So if tomorrow, if the rates go high, so people have the ability to pay that mortgage.
So it's a safety net.
It's a safety for clients and everybody.
Okay. So in terms of a repeat buyer, for example, an investor, well, what changes? How do these changes impact them?
Repeat buyer, there are no much changes. It's similar to like same criteria for qualification, but investor category they had made some changes. Like before, people can buy as low as if you are even buying a second property, you need minimum 10% down payment. But right now, they change into minimum down payment requirement is 20%.
Okay.
So if you are an investor and buying an investment property, you already own one property, you need minimum down payment is 20%. But there are products available where if the homeowner shows the first property as like he bought it for 5%, let's say, right, and he is moving into a bigger property. So in that case, that will be his now principal property will be the next property which he will be moving in. So still he can buy that property at 5% because he's still moving in. That's in the property he's living in. But again, he has to qualify for that. But if it is only for investment purpose, then minimum 20% requirement.
So what about equity takeouts? Now we saw before we were able to get up to, I believe, up to 95% of the equity. So if he had $100,000 house, we had $80,000 in mortgage, $20,000 in equity. I needed $15,000. I was able to go to the bank, get them to refinance it, and we were able to get the $15,000.
Yeah.
I know that has changed too. What is the maximum percentage now?
There were two factors in there. One was this, that people who are self-employed, for them they change it to 80% loan to value ratio.
Okay.
Like let's say if you have a 100,000 worth property and you have 20,000 equity, you can't go lower than 80%.
Okay.
So, but if you are employed working somewhere, you are a salaried person, then you can still go up to 90% loan to value.
Okay. So they have decreased it to 19.
Exactly.
All right.
Yeah.
All right. So I really appreciate the information you're giving me. One last question: what's the advice that you would give to somebody who's looking to buy a house right now?
Yeah, my best advice would be like before even when you see a realtor, right away you should see first of all a mortgage agent or mortgage specialist, whoever you're working with, or if you're referred by your real estate agent. So based on that, he can qualify you, and you should know up to what price range you can buy a property. So you know everything like what to look for and what's the price range you should. That's why it's the best idea. Always see the mortgage specialist as soon as you start thinking about buying a house. So in that case, you will not waste your time. You will be within your budget. You will not go out of your budget, and you can take it from there.
Excellent. I really appreciate it. Thank you very much.
Thank you very much. Nice meeting you. Wish you good luck.
Yeah, talk about mortgages. For our viewers, if they need to contact you, what's the best number to reach you at?
Yeah, they can reach me at, I'll leave my office number, which is 905-290-2202.
Excellent.
So that's my office line. They can call me anytime.